We added millions in profitable revenue for this brand by intentionally lowering their ROAS, the metric you're obsessed with. Hi, I'm Joel, founder and CEO of Human, a digital ecom agency, and CMO of Thompson T, an ecom brand. I worked with my team to build Profit Compass for the ecom owners and operators and marketers we work with every day to help them scale better using the right data at the right time to make the right decisions. Profit Compass is the only tool that gives you a single pane into your entire ecom business, giving you the most important metrics to make the right decisions, whether you're doing it yourself, you're working with ecom operators or marketing teams, or even using AI. You need to know at a daily level what's going on in real time with your revenue and profit, with your contribution margin, with your funnel and your conversion rates, how many net new customers you're acquiring, how efficiently, and all of your key marketing metrics, all together in one view with full context and full visibility to make the smartest decisions. Using Profit Compass, let's look at real data from one of our customers to show you how they were stuck in the high ROAS trap that you're likely stuck in. Before we were able to scale their business to 10 million last year, let's go back to 2024 when we saw this critical insight that we acted on. Taking a look at their blended ROAS earlier in the year in 2024, you can see healthy marks of anywhere from 4 to 5x. And this is where most businesses get stuck, and it's totally normal. We see good ROAS numbers, 4x, 5x. That's fun to look at. That's fun to talk about. Let's do more of that. Let's build more campaigns to get to those really hard numbers. Moreover, our revenue is growing month over month or year over year. So we feel pretty good about the business. However, businesses like this are leaving profitable revenue growth on the table, new customers on the table. They are intentionally limiting their scale. They just don't know it because they don't have the fuller picture and they don't understand the true unit economics of their business. And this is where most ecom businesses and owners get stuck and why they're unable to scale to the next level. Let's look deeper. Let's look at the right questions to ask ourselves and the right numbers to look at to decide when and how to scale a business and how much budget to put into it. Using Profit Compass, we looked at all the key insights that enabled us to make the decision to double this business twice. First, revenue and profit. We saw year over year healthy growth from a net revenue perspective. Further, our contribution margin was also growing year over year. We came down to our customer acquisition costs and see that we're at a healthy $30 acquisition cost on each customer. Our blended ROAS, as mentioned earlier, was at a 4 or 5x, and our MERS and AMERS were very high and also growing year over year. Again, adding to new customers and contribution margin. Good? No, not good. This is what we see when we look at a deeper level and go beyond high ROAS and top line revenue. First, our estimated break-even CACs were much higher than what we were spending. Again, if you're obsessed with efficiency, this can look like a win, but it's really not. It means you have a lot more customers that you can acquire, and you have room to profitably acquire those customers between this $33 mark and the $74 mark. What this data is telling us across the board is green light go, green light scale, green light push, not how can I get more campaigns with the same blended ROAS and some small incremental revenue growth. This screamed push at a lot bigger level. You can see our total ad spend was relatively flat. Why? Because this is like most businesses where it was capped at a monthly level, generally around $30K a month. Our new customers were not growing as fast enough as they could be, especially given our break-even CAC relative to our actual CACs. And again, our blended ROAS screams profitability on the table. There's room to grow when we're at a 5x and maybe our blended ROAS break-even is 2.5. Between the 2.5x and that 5x is all profitable revenue growth that's left on the table. Now the moment of truth, when we get the permission to hyperscale the business. Why? Because we have the all-in-one view of the whole business with green indicators flashing that we should scale and that profitable scale is on the table. From that conversation, we're able to stop focusing on high ROAS as a business and fixed marketing budgets and secure a 10x marketing investment for the November and December period of this 2024 year. We spent $1 million in this 60-day period compared to $100K in the prior year. That's a 10x marketing investment because we were super confident in the data that we had in real time. Moreover, we looked at our data on a daily and weekly basis to ensure that we were profitably scaling along the way. We didn't just blindly dump $1 million at it in any given month and then look backwards to see if it worked. We understood at the daily level if that was working. What was the result? You can see it here. almost $1 million in contribution margin or profit to the business, almost 20,000 net new customers to the business. And we did this all while still maintaining efficiency metrics that are really still above the threshold of what we could have went to. Moreover, we see our customer acquisition costs actually leveling out at $50, much higher than what we were getting at the beginning of the year, but still very much within our threshold. In fact, we probably could have scaled and pushed further. The net result of this for this period, a 50% increase in contribution margin, 135% increase in gross revenue. This was just the beginning, as we were able to do this again in 2025. So what's the takeaway? What's the lesson here? We were able to make confident decisions using data, the most important data to make the best decisions. In fact, we're able to do that in real time with the CFO and with the CEO of the business. We do that using daily incrementality tools. So the previous view shows you what happens at a monthly view, still in real time throughout the month. But what we really need to see is at a daily level if we're increasing our profitability of the business or our contribution margin each day. So we can see period over period, year over year, day by day, our blended ROAS, our total spend, how many new customers we're bringing in, at what cost, and ultimately, if the next day is yielding more profit than the day before it, giving us the answers to what we need to do in real time. We can further see this by platform across Meta, across Google, and any other advertising platforms we're using. This is the difference between business performance and just marketing performance. Let's look at another example of using this data to make the best decisions with our money. In this case, we scaled budgets by over 200% and dropped ROAS by over 50%. Normally, that's very scary for a business. But in this case, using the data and using daily incrementality, we were able to control it and grow it profitably with over 100% revenue growth, all while maintaining profitability, an 80% increase in contribution margin, and over 130% net new customers and net new customer revenue. So if you're just optimizing for ROAS and you don't have the complete picture of your e-com business, you're probably underscaling. You're definitely leaving contribution margin and new customers on the table. So if you want to see if you might be leaving profitable revenue growth on the table today, or if you just want to see all of your key e-commerce KPIs laid out in this format, let's connect. We'll run a free profit compass diagnostic on your business. With just a few connections, we'll put it back into this powerful format and give it to you to make the right decisions in real time. It doesn't matter if you work with human or not. This data will be yours to make smarter decisions. Click the button. I look forward to connecting and getting this information back into your hands.